Hey guys, welcome back. Today we have 3 more interesting SPAC stock with outstanding management that you may want to buy soon. Of course, remember this is a SPAC stock, so it is considered a speculative investment. And lastly, full disclaimer, this is just my opinion and not financial advice, so please do your own further research. With that said, let's get into it. So first, we must do a quick recap of the 4 key strategies for a profitable SPAC trade. Again, I must keep emphasizing this so that we remember to strictly keep with our trading strategies and not let our emotions get involved. I won't go into details as we already learned this in our previous video based on how hedge funds trade SPACs. If you've not watched it, please watch the detailed video explanation on SPAC strategies above. Okay, so number 1, we will only buy SPAC stocks with reputable sponsors or great management. Number 2, we want to buy in early at the IPO stage. Number 3, buy at or near redemption IPO price. And then step number 4, we will sell at deal announcement. Okay, so the first SPAC we have is Queen's Gambit Growth Capital, GMBTU. Full disclaimer, I recently bought some shares on Wednesday. This SPAC just raised $300 million, which is up from $225 million due to the higher demand. What's super interesting is that this SPAC is being led by an all-female management team. The CEO is Victoria Grace, the founding partner of Coley Capital Partners. Coley Capital is a global technology venture fund focused on early-stage companies in the software, logistics, healthcare, and fintech sector. So far, Victoria and her team has made 69 investments and has 12 successful exits. In particular, one of their investments, Helion, a hydrogen battery fuel cell maker, recently merged with Tortoise Acquisition Corp in September, which at one point was up over 500%. Thus, Victoria has a lot of experience with SPACs, and it makes sense that she will want a SPAC of her own to bring their own portfolio companies public. This SPAC intends to target businesses that provide solutions promoting sustainable development, economic growth, and prosperity with sectors of potential interest including clean energy, healthcare, fintech, industrials, mobility, and emerging technology. Hence, this is definitely aligned with what her fund invests in and definitely within the expertise of Victoria and Coley Capital. Additionally, what I also like about this SPAC is that it did a very good job on marketing and branding. By choosing a SPAC name after the recent popular Netflix chess movie Queen's Gambit, and in keeping with the theme, surrounding it around an all-women-led team, is a good marketing play and will bring very good news coverage and media attention, which is very important for the SPAC as the publicity will help to bring in more buyers and increase the stock prices. Overall, Victoria and Coley Capital is the perfect sponsor for the SPAC as they have the experience and connection along with a portfolio of companies ripe for going public. In addition, the current Biden administration is very keen on green energy, hence any deal in this sector will dramatically increase the stock price. In looking at step 2, the stock just IPO'd on Wednesday and immediately popped higher to $11, but ended the day lower at $10.70. It last traded at $11.14 yesterday. Next, let's take a look at the technical to see the price action and determine a good price for us to get in. Remember, we want to buy at or near the redemption price of $10. However, as this stock is still so new, there isn't enough data to really get a good idea of the technicals. Just looking at the charts, we see that it has resistance and selling pressure at $11.15. There's good support at $10.65. Looking at the fundamentals, we know that the base asset value of this SPAC is $10. However, since we are buying in early on the unit level, this SPAC also includes 1/3 of a warrant. We know that a typical SPAC warrant usually trades for around $2 each. Thus, the max price we should buy this SPAC is at $10.66. $10 for the stock plus 66 cents for the warrant, since we only get 1/3 for each unit, which gives us the max price of $10.66. Given this, at the current price of $11.14, it is a bit higher than I'm comfortable paying for. I expect that once demand falls and the hedge fund starts taking profit, the stock may drop lower. Thus, I would just wait a bit to see if we can buy it at a lower price, limiting our risks. Next, we have TZP Strategies Acquisition Corp, TZPSU. This SPAC just IPO'd on Wednesday and raised $250 million. It intends to target companies in the technology and business services as well as consumer products and services industry. The sponsor is an affiliate of TZP Group, which is a $1.9 billion investment firm that invests in lower middle markets with identified focus sectors and strong growth prospects. The CEO is Sam Katz, who's also the founder of TZP Group. TZP has made over 13 investments with 3 successful exits. In 2020, TZP was named Inc.'s 2020 Top Best 50 Private Equity Firms for Entrepreneurs and Founders. In addition to TZP, Sam's prior experience, including VP roles at the Blackstone Group, where he worked on numerous private equity transactions. Prior to that, Sam invested in many deals for private and public equity as co-chairman of Sabre Capital. Thus, Sam has a lot of private equity experience and is very capable of finding a good deal. Hence, this could be a good SPAC to consider. In looking at step 2, the stock IPO'd on Wednesday and popped to $10.35. Currently, it last traded at around $10.30. Thus, the stock is still very cheap. In looking at the technicals, we see that it has strong resistance and selling pressure at $10.37. There is support at around $10.25. Looking at the fundamentals, since we are buying in early at the unit level, this SPAC also includes 1/3 of a warrant. We know a typical SPAC warrant usually trades for around $2. Thus, the max price we should buy this SPAC is at $10.66. $10 for the stock plus 66 cents for the warrant, since we only get 1/3 for each unit, which gives us the max price of $10.66. Given this, at the current price of $10.30, it is a good buy here. The stock is very cheap and you're getting a very good value with limited downside. Next, we have Gores Metropoulos 2, GMIIU. This SPAC IPO'd on Wednesday and raised $400 million. This SPAC is also very popular as it is sponsored by both the Gores Group led by Alex Gore and Dean Metropoulos alongside his Metropoulos family office. Both Alec and Dean are very famous and successful private equity investors. We previously talked about Gores holding SPAC, so I won't go into too much detail about it here. You can learn more about them in our previous SPAC video above. As for Dean, he is a billionaire entrepreneur and investor who have successfully saved and turned around many iconic brands such as the Twinkies brand, Chef Boyardee, Blue Ribbon, and Bumblebee Tuna. More recently, in September, Dean and Alec through Gores Metropoulos 1 recently completed a merger with Peter Thiel's startup Luminar. That SPAC was up more than 250%. Hence, with Alec and Dean's experience and successful track record, I'm confident they will be able to find another great deal soon. In looking at step 2, the stock IPO'd on Wednesday and immediately popped up to $11.50. It ended the day closer to $11.16 and last traded at $11.35 yesterday. As you can see, this stock is very popular because of its famous sponsors and management. Thus, I cannot stress enough how important it is to invest in SPACs with great sponsors. In looking at the technical and price action, we see that it has resistance at $11.50 with very strong support at around $11. Here, since we are buying in early on the unit level, this SPAC also includes 1/5 of a warrant. Since other SPAC warrants usually begin trading for around $2 each, using simple math, we know then that this SPAC right now should be worth $10 for the stock plus 40 cents for the warrant, which gives us a max price of $10.40. Thus, at the current price of $11.35, it is a bit higher than I'm comfortable paying for. We know that this name is very popular, but once the demand falls and the hedge fund starts taking profit, the stock may drop lower. Thus, I would just wait a bit to see if we can buy in at a lower price, limiting our risk. In summary, these are another 3 SPACs that have good sponsors and management. However, for 2 of them, the price is a bit higher than I'm comfortable with. To be a good, prudent investor, we need to stay disciplined with our strategy, and thus, let's wait for a better entry point. That's all for today. Comment below and let me know what you think about these SPACs. Are there any other interesting SPACs that you're looking at? And lastly, remember, this is just my opinion and not financial advice, so please do your own further research. Happy trading, and please don't forget to subscribe.